We've got CoreLogic's quarterly housing data hot off the press. Of course, all of this against a backdrop of a debate around whether rates need to rise here yet again. We heard from the Assistant Governor this week, Anthony Landahl from Equilibria Finance. I'm going to put him through his paces. Welcome. Nice to see you, Anthony.
Great to be here.
So, my previous guest is expecting a Melbourne Cup rate hike. Are you?
Look, the CPI data on the 25th of October is obviously going to be critical, but if I was to take a punt on Melbourne Cup Day, my instinct is that there may well also be a rate rise of 25 basis points. There's been talk of another rate rise before the end of the calendar year, so I think there may well be as well.
Now, what's helping to form your opinion? Is it the data that you're seeing coming from the housing market? Because while interest rates are a very blunt tool, you know, that's the place that it is very evident in terms of the pain that it's causing for some sectors of consumers. Or is it some of the commentary that we got from the Assistant Governor, Christopher Kent?
Well, Christopher Kent was talking this week around the willingness of another rate rise. They're expecting to hit their CPI targets maybe late 2025. So they're still feeling we're well above target. They've also made the comment they're looking at other factors, such as the employment numbers, such as consumer spending. And they are starting to see a drop in consumer spending on household goods, which is an encouraging sign. But there certainly appeared to be a willingness from Stephen around making another interest rate rise. I think in addition to that, those inflationary numbers we saw last month were higher than expected. We just saw the US numbers higher than expected. So it'll be really interesting what we see come mid-October. But I think on the back of some of those drivers of inflation and what they're trying to slow down, there's a real good chance our inflationary numbers are still going to be above where they want to land. And at the moment, their main mechanism is interest rates.
Mm-hmm. And so that's what you're preparing your clients for, no doubt, in conversation. What are you seeing, though, in terms of lending demand?
Yeah, flows of credit are down. The recent data we've seen for the quarter is that owner-occupier flows are down about 12.5% year on year compared to last year. We're seeing a rise in investor flows, which is encouraging. A lot of investors are starting to look at coming back into the market. The big challenge we've had with investors has been the cost of funding and the cost to hold a property. They've had cash flow concerns, but we're seeing some of the more longer term savvy investor, if you like, starting to look at coming back into the market. Their challenge now is finding investment grade properties because of the shortage of stock. Their big challenge is finding properties that, from their point of view, make sense as an investment. Then they're looking at the ability to hold those from a cash flow perspective. So investment credit flows are up a little bit. They're still down sort of on historic trends, but they're up a little bit. Owner-occupier flows are still lagging a little bit. The recent ABS data is indicating.
Yeah, well, speaking of ABS data, we do get data coming through today on overseas arrivals, most of which will be migrants, long-term resident arrivals. So with that in context, knowing that we've got this supply crunch, does that in turn somehow drive demand, or how do you see that playing?
Yeah, Australia's had it's almost like there's a confluence of factors that are coming together now with this supply problem we're seeing. Interest rates, relatively speaking, since say the 90s are quite low. So that's meaning access to credit in relative terms, the ability to buy a house in relative terms is quite strong. There's been a lot of demand-driven initiatives, first home buyer initiatives, deposit scheme initiatives, and there's been restrictions around increasing supply with council restrictions, greenfield restrictions, construction restrictions. I was at an AMP briefing recently and Shane Oliver was talking about the real immigration number to actually be able to manage with what we can construct is about 200,000 a year. We're looking at about 500,000 a year immigrants coming in, which is creating this, it's exacerbating this supply shortfall we've got. So the actual numbers that the data is showing that we can potentially keep up with to construct compared to what we're bringing in is about half of what those migrant numbers are going to be. So yeah, the new ABS data will be interesting, but I think philosophically, the increase in the immigration numbers, they're coming in because of the rental crisis, because of the rental cost of rent, a lot of them are straight away looking to buy houses. That's keeping prices up. That's adding pressure to the market.
Well, speaking of, we're on a Friday. It is gorgeous outside in Sydney today. It is the spring selling season. Auctions, in primarily New South Wales and Victoria, admittedly. But what are we seeing in the data as far as demand, as far as how that's translating into price?
Yep, so we've had 12 interest rate increases. We've got affordability issues, but we're seeing a housing market grow. Yes. It's grown for the 8th month in a row. The September quarter was up 2.2%, June quarter was up 3%. So what we've seen is a little bit of a slowdown in growth, but that's because a bit more stock has come on the market in spring, albeit we're well below stock levels over a 5-year trend. But auction clearance rates are up a little bit, but that is part due to concentration competition with limited stock, relatively speaking, compared to other springs.